Howdy, y'all. Welcome back. It's Liberty Call for Wednesday, December 22nd, 2021. I hope everyone's having a fantastic day out there in the interwebs. It's another fantastic, beautiful day here on the Front Range. A little overcast, but still quite a bit of sun. Still not too cold, which is perfect. Like I said, hope everyone's having a great day. If it's your first time watching, be sure to like, share, and subscribe. And let's see, not too much turbulence in the markets today. It looked pretty good. It appears that most things were up, and the news based on Omicron seems to be waning a little bit. I'll bring up some charts just to show you what we're looking at here in Colorado, and I think probably it'll happen around the rest of the United States sooner than later. So, all right, well, let's go ahead and jump in and take a look and see how the indexes did today. The Dow Jones was up 0.74, the S&P 500 up 0.98, NASDAQ up 1.18, small caps were up 1%. The VIX was down another 11% today, down to 18.63. That is, excuse me, certainly a good number if as far as the volatility and the fear gauge in the markets. Looking across Europe, lots of greens from what we can see here. Get down to Asia. Asia looked kind of mixed. It was some green or one green and a couple of reds, but nothing down too much. So all in all, for December 22nd in the books, it looks like the market looked fairly good today. So I know yesterday I did say I was going to share with you as far as what's going on in the market. So let me go ahead and take a look at, where is it? There we go. All right. So let me share my charting screen. So, all right, right here, we're looking at the S&P 500. Let me drag that out of the way. And as you can see, over the last, 2 years almost, you can see, obviously, we had this downturn here at the beginning of the coronavirus. And, we've had this nice rally, but then we, like I've talked about in previous videos back a few months ago, we broke this line of resistance here in about mid-August, had a few months where the market was, at least the Dow Jones was trending in a, southeastern direction. And then it broke this upward resistance in about mid-October. And it's just kind of been flailing along the last, 2 months. So you can see here, it's kind of gone up, kind of gone down, bounced off of this. I'm not sure necessarily if that's really a point of resistance. And then, like I said, really since the beginning of December, it's kind of just been, it's kind of like crossing the Pacific Ocean when there's not a lot of wind. So really hard to tell where the momentum has taken the market right now. So, we'll talk a little bit later about, some predictions that some of the smart people out there seem to think, and we'll compare and contrast, and see how they did. So, but, as of right now, if you were to ask me as far as what do I think is going to happen, if I were betting money on this, I would say probably next year we could expect some sort of a retracement, recession. Something, with all this cash that was pushed into the economy over the last 2 years, it is the expectation that, when the music stops and you got to find a chair, someone's going to kind of be left out in the cold. So, all right, let me stop that and go back to what we were looking at before. So, all right, here we go. All right. Well, had a couple of articles that I did want to share with everybody. This first one will probably be some good news for those people who have student loans who are unable to pay them back in a timely manner. Biden extends pause on student loan repayment. This was published today. Let's go ahead and dive in. U.S. President Joe Biden said on Wednesday that his administration was extending the pause on student loan repayment for an additional 90 days, citing impacts of the COVID-19 pandemic. Today, my administration is extending the pause on federal student loan repayments for an additional 90 days through May 1st, 2022, as we manage the ongoing pandemic and further strengthening our economic recovery, Biden said. Let's see. He's quoted again. The Biden administration had extended through January 31st. Quote, we know that millions of student loan borrowers are still coping with the impacts of the pandemic and need some more time before resuming payments, Biden said on Wednesday. So nearly 41 million borrowers benefited from the freeze on interest accruals, and about 27 million borrowers have not had to pay their monthly bills since the forbearance began. Democrat lawmakers, including Chuck Schumer and Elizabeth Warren, welcomed Biden's announcement and continued to call on the administration to cancel up to $50,000 in student debt. So, well, if we do some quick math, 41 million borrowers. So 41 million times 50,000. Man, that's a lot of zeros. So that's one, two, that's millions, billions. That's two. Is that right? Thousands, millions, billions. $2 trillion is what we would have to waive. Who's going to pay for that? I mean, that's my big question. So, I mean, who is going to pay for the $2 trillion, just based on some back of the, table or napkin math here? Man, that's a big bill. And, you borrowed the money, you got to pay it back. Sorry. That's just the way life is. So, all right. Next article, U.S. authorizes Pfizer oral COVID-19 treatment first for at-home use. So I guess for the COVIDiots out there who are extra worried, this may be a welcome sign for you. This was written by Dania Nadim and Carl O'Donnell. The United States on Wednesday authorized Pfizer Inc.'s antiviral COVID-19 pill for at-risk people aged 12 and above, making it the first oral treatment and which can be taken at home, providing a potentially important tool in the fight against the fast-spreading Omicron variant. Pfizer's antiviral regimen, Pavlovid, was nearly 90% effective in preventing hospitalizations and death in patients at high risk of severe illness, according to data from the company's clinical trial. Well, is that a relative reduction of 90%, or is that an overall reduction of 90%? Because in the previous studies that the drug makers, they said that you had a 95% reduction in COVID symptoms based upon, and that was a relative reduction. So, in the grand scheme of things, it was very small, because I think it was like 18,000 participants in each side of the study. And I think the number was like 8 who were vaccinated got COVID and like 100 and something that weren't vaccinated. So yeah, it was a huge number relative, but in the grand scheme of the study, it was very minuscule. So I'd be curious to go and dive into the numbers and see what the actual case is. Quote, Pavlovid's approval is a major milestone that marks another step towards making COVID-19 a much more manageable infection, said Amesh Adalja, a senior scholar at Johns Hopkins Institute for Health Security. There are 2 key issues, however, that remain. It will be scarce in the coming weeks, and its optimal use requires prompt diagnosis, which can be difficult with the continual testing programs that plague us. Yeah, the tests are awful. Pfizer has said it has 180,000 treatment courses ready to ship this year. The U.S. government's contract for 10 million courses of the drug is priced at $530 per course. So the government's probably going to pick up the tab on 10 million doses at $530 a dose. So that's another, $5 billion that the drug maker is going to make off of this, off our taxes. Great. So, I guess it's good that there's potentially a treatment that you can take orally, but the big problem I have is that we'll be paying for this out of our tax dollars until the government collapses. So some good news. If you want to read through that, I have attached it to the show notes page. All right, we're doing good on time. All right, and then this last one was this comes in one of my newsletters I read. It's titled "How Harry Dent's Predictions of Doom and Boom Have Turned Out" by Roger Wollner. All right, so let's go ahead and dive into this. Harry Dent is a prolific author of investing books and predictor of the direction of the stock market and the economy. ThinkAdvisor has featured a number of interviews with Dent, including a discussion in late November of his negative view of the stock market and the economy for 2022. We wanted to go back over time and take a look at some of Dent's predictions and compare them with what actually happened. Looking at where Dent's predictions were on target and where he missed. So who is Harry Dent? Dent is the contrarian's contrarian. I already like the guy if he's a contrarian. Is a Harvard-educated economist who runs a research firm, HSD Publishing. Firm publishes newsletters, including the HS Dent Forecast. Dent is also an author of many best-selling books on the markets and the economy. Dent has written at least 10 books over the years, with a number of them becoming bestsellers. Dent bases his predictions largely on demographic, market, and economic cycles. He has pointed to intervention by the Federal Reserve, who, when those predictions have not materialized, likening continued stimulus to giving drugs to an addict. When asked by ThinkAdvisor in March how he responds to critics, he said he told them to pound sand, not his exact words, probably was like F you, and pointed out that publishing newsletters allowed him to adjust forecasts as conditions changed. So what Dent got right? Dent correctly called the bubble burst in Japan in 1989 and the long recession that ensued. He also correctly predicted the bursting of the dot-com bubble. Additionally, Dent is credited with predicting the populist groundswell that propelled Donald Trump into the presidency. Beyond these predictions, many of Dent's forecasts have missed the mark. Here's a look back at some of those more notable stock market and economic calls. 1990, the Roaring 2000s. In Dent's best-selling book, The Roaring 2000s, Building Wealth and Lifestyle You Desire in the Greatest Boom in History, published in October of 1999, he predicted that the stock market would experience a significant boom during the first decade of the new century. In fact, he predicted that the Dow might hit 35,000 in the upcoming decade, in large part fueled by demographic changes for the baby boomer generation. This did not happen. Both the S&P 500 and Dow finished the decade lower than at the end of 1999. So you can see here at the end of 99, the Dow was at 11,497, and in the end of 2009, it was 10,428. Granted, we were just coming off a pretty significant bust off the housing crisis, and the S&P 500 was 1469. And at the end, well, this is a typo, at the end of 2009, it was 1115. The decade was marred by three events. First, the dot-com bubble at the beginning of the decade, closely followed by the September 11th attacks. And the latter part of the decade saw the financial crisis of 08 and 09, with the real estate bubble, havoc in the financial sector, and a severe drop in the stock market. 2006, the next great bubble boom. Dent followed up his predictions of a boom for the upcoming decade made in the Roaring 2000s with another bold upward prediction. His book, The Next Great Bubble Boom, How to Profit in the Greatest Boom in History, 2006 to 2010, was published in January of 2006. In this book, he doubled down on his predictions for the 2000s and foresaw healthy gain for the rest of the decade. Again, he was proved wrong by the financial crisis. So, 2008, the Great Depression Ahead. At the end of 2008, Dent published his next book, The Great Depression Ahead, How to Prosper in the Great Crash Following the Greatest Boom in History. If we look at the markets from 2009 to present, the predictions made in the book have not come true. Since the stock market bottomed in March 9, 2009, we have seen tremendous growth in the major averages. So the Dow on March 9, 2009 was 6547. And as of December 15th of this year, it was 35,927. The S&P 500 was 677 and was sitting on December 15th at 4710. While we have seen some major dips in the stock market and in the economy over this period, mostly we've seen growth. Perhaps the worst period for both the economy and the stock market was in the early to mid 2020 in the wake of the pandemic. Even with everything that happened in 2020, the stock market finished with respectable gains for the year. December 16, the Dow 5,000. The market rallied in the wake of Donald Trump's election as president in November 2016. Dent made this prediction in December of that year. He was quoted on CNBC in December of 2016 saying, I think the Dow is going to end up between 3,000 and 5,000 a couple of years from now. Again, this prediction did not come to pass. The Dow has not dropped below 19,000 since he made this prediction. The Dow did drop over 20% in March of 2020 in the wake of the pandemic, but that decline brought the index down to just under 22,000. The Dow closed over 35,000 on December 14th. 27, major crash within 3 years. In June of 2017, interview with ThinkAdvisor, Dent predicted a major stock market crash a major crash in the stock market, the economy, and in real estate over the next 3 years. He predicted this in his 2017 book, 0 Hour. Turn the greatest political and financial upheaval in modern history to your advantage. Part of the book description on Amazon says the turn of the 2020s will mark an extremely rare convergence of low points for multiple political, economic, and demographic cycles. The result will be a major financial crash and global upheaval that will dwarf the Great Recession of the 2000s and maybe even the Great Depression of the 1930s. In part, Dent's predictions did come true. First, in 2018, major market averages finished down for the year, with the S&P losing more than 6%. We saw a brief major market decline at the beginning of 2020 as the impact of the COVID pandemic became widespread. The S&P 500 declined about 34% from its high in mid-February to its pandemic bottom in late March. By the end of 2020, the index had posted a gain of over 16% for the year. March 2021, biggest crash ever by end of June. Dent predicted in March that we would see the biggest crash ever by the end of June. He predicted this crash would cause a drop in excess of 45% of the S&P 500, and the crash would initiate an economic downturn to be worse than 08 and 9. So we can see that didn't come to pass. Now, I would agree with his 2020 or 2017 major crash within 3 years. Maybe not for the same reasons he was talking about, but if we go back to the yield curve in when was that? Let's go back here. So we can see the yield curve began to flatten out in 2018. Yeah, so you can see how flat that is, late 2018 through, really the first half of 2019. And then it really sunk in at the beginning of 2020. So, based upon that information, I mean, me personally, I could see that we were heading towards some sort of typically when the yield curve inverts, within a year or two, it's expected that you could have some sort of a market downturn. But last year at the beginning of this, crisis, if we're going to call it that, my expectation was, this was our normal time for the market to go through some sort of a downturn, recession, whatever you want to call it. And then the Fed came in to the rescue to save the economy because we were in the middle of a pandemic and just poured $4 trillion into the system. And we've now paused whatever downturn we were headed into for, almost 2 years now. So whether or not we go through that cycle sometime soon or, a year or two down the road, I have no idea. I can't see the future. But, my expectation would be, we'll go through that downturn eventually. And, as long as we don't have financial support from the Fed, we should come out of it, pretty good. But if the Fed helps out again, and all we're going to do is just delay the inevitable for another, 5 to 10 years. So we'll see what happens. It definitely is, interesting, But all right, well, that's everything I had for today, and I still almost took 20 minutes. My apologies. All right, well, if anybody needs anything from me, don't hesitate to reach out. Emails, phone calls, smoke signals always work. It's a nice clear day. I should be able to see them. So, but like I said, if you need anything from me, don't hesitate to reach out. And I'll be back tomorrow with Thursday's Liberty Call. And I hope everybody has a great evening.